basically the first you have to understand this whole whatever we are doing at the liquidity ranges, the everything starts with the QM. And the QM is basically for the we use to mark the structure, and the structure will always start from the QM and it will end at the QM, and then we will call this a valid structure. And if and once we have the valid structure, what we are looking for, we are looking for the price to take the internal range liquidity. This is called the internal range liquidity. And then we are expecting for the external range liquidity. This is the very basic thing. But for the QM, there are different three types of elements which creates a QM. The element number one is what we want. We want to see a valid pullback. This pullback from here to here, is it a valid pullback or not? This is the question number one, and we will discuss this one also. Number second, we are looking for the liquidity grab. Okay, once we have the liquidity grab, and then the third element is what? We are looking for the break of structure here. So these three elements consist of to create a one QM. Okay, and once we have the QM, we want to see the opposite QM to confirm the range. And in this case, this is the pullback, right? And this is what? The liquidity grab, number two. This is number one. And then what we are looking for? The breakup structure. This will be number three. And then we are looking for what? The internal range liquidity. And we will discuss everything about internal range liquidity and these kind of things and what type of ranges we have. This is all we will go into the intermediate to the advanced stuff later on. But first, everybody have to understand this is called what? The range cycle. So this is the range cycle. Range cycle is what? The market starts with the structure starts with the QM, ends with the QM, market takes the liquidity, and then market goes to take the external range liquidity. So this whole cycle is called the range cycle. Okay, then everything whatever we are doing here is just the range cycle, but there could be a different variations, and these variations we will discuss over and over. Okay, now everybody know that, like I said, there are three elements uh, for the QM. So liquidity grab and breakup structure elements, but one element is pullback, and a lot of people they feel the confusion in this one. So what is the valid pullback? Look, for example, we are coming down. So this is the candle, and this is another candle, and something is coming like this. You will start to see the valid pullback from the high. We never took the high of the previous candle. And later on, we will see these all things on the chart as well. So first we start on the whiteboard. And suddenly the market takes the previous candle high. And this is, we will call this as a valid pullback. So our first thing is confirmed. What is this? The valid pullback. And second thing, what we are looking for? We are looking for the liquidity grab. So this is here. This is the liquidity grab. So liquidity grab, now our two elements have completed. And then market turns up and takes this valid pullback. In this case, we will say that the QM is confirmed. So we will just put a dot here. So we know that our range, or you can say our range start or end, it depends on where we are in the range. At least the range is confirmed here for the QM. So always you need to see the three elements, and the most important element is the valid pullback. And once we have, and let's say this is the, we are going up, and at some point the market takes the low, and then market takes the high. So this is the valid pullback, and this is the liquidity grab, and then market breaks the structure. And we got the three elements, and we will say our QM is confirmed. Now what we have? We have the, this is the liquidity graph, and now we have the range. So everybody is cleared now here that we have confirmed a range. And once our range is confirmed, then we are looking for something, the internal range liquidity or something. And here we are expecting the price to come to take the internal range liquidity. Then we have some POI. It could be the order block, it could be the breaker block, or there could be a different types of things. And once we have the POI here, the market takes from here, and then we expect, and this is our first target, or it could be even your last target, depends on which range you are. If you are on the 1 minute range, then maybe this will be not enough for your risk to reward, or maybe it's not too much favorable, maybe you will make like 1 2 3 or something. But here we at least, like, I personally at least always want 1 to 4. I never ever go below 4. It could be 5 or up to 7, but up to 7 is very difficult to handle for me even. And I like to close my position between 5 to 7, something like this. So if you get here your 5, or even you get here, it depends on your range. Like if your range is on the just 1 minute time frame, maybe here you will get just maybe 3 or something. Then you have to go a little bit higher to have 4, or something 5. But we will talk on the risk management, or position management later on. First is a very basic stuff, that what we are looking for, we are looking for the external range liquidity and maybe the continuation, something like this. And now we see on the chart, look here what we have here. Can you see here that let me just zoom a little bit more, because first we are going to explain this concept, so I'm just going to zoom as much as possible so everybody can see clearly. Look here, this is the high, this is the high. What is this? This is the inside bar of this one. So if this candle even takes the high of this candle, this is not the valid pullback. Remember, this is the, like I said, the valid pullback must need to take the previous candle high or previous candle low, in case you are on the bullish pullback or bearish pullback. In this case, we need the previous candle high. But exception is that candle should not be the inside bar, and its inside bar is not like just one candle inside bar is inside bar. It could be multiple also. Even look, this candle even took the high of the previous, but this is the mother candle. If you could have even 5 7 candles or 10 candles, doesn't matter, until the market will not take the high of this one, we will never say the market has taken the high, or we will never call this one a valid pullback. So what we have quickly here, the, we will not count this candle, so this candle have no existence in the market for us. And then the next high is this one, and the market took the high, and now we will mark this as a valid pullback. Okay. And then what we are looking for, we are looking for, once we have the valid pullback, this is the point number 1. Point number 2, what we are looking for, the liquidity grab. So this is the liquidity grab, the market broke the low of this one. And then what we are looking for, the third point, the third point is the market need to take the pullback high. And once the market took the pullback high, we will confirm this, that the low is confirmed as a QM. So this is how we will mark our QM. Once our QM is confirmed, what we want to see, we want to see the opposite QM. But in this range, we don't want the opposite QM, because actually this range is coming from this side in the structure. Later on, we will talk about the structure as well, but this is not the topic about the structure. This is first the start of the uh, QM, how we mark the ranges. So this is the low is confirmed, and our high was confirmed here. First, our high was confirmed, then our low is confirmed. So in this case, the market is going up, something like this. This is the high, 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 and the market broke the low. Market broke the low. This is what? This is the valid pullback. And then what is this? This is the liquidity grab. So where is the third step? The third step is the market need to break the low of this one in order to say that the QM is confirmed. But this never happened. And then this is high, this is high, previous low is broken, and even this low is broken. So we have a valid pullback. What we are looking for, the step number two, the liquidity grab. So it is going something like this. We have the valid pullback and liquidity grab also done. But where is the breakup structure? We don't have the breakup structure in order to confirm our range. So we will just continue. But once we continue, which one is our valid pullback? This one, right? Because the low was never broken. So this is the the last low. So now you see this one, how it works, something like this. This one like this, it's something like this, and then this one. So you see that this is the valid pullback, this is the liquidity grab, and this one is the breakup structure. And our three elements have completed. So what we call this one? A valid high, or a QM is confirmed. So this is how we will confirm our QM from point A to point B. And remember, this is the most important point for everyone, including intermediate or even advanced traders. This is not the just basic thing which I'm going to discuss now. The QM is, after this QM is confirmed, this is your left side of the leg, left side of the leg. And whatever happen on the right side of the leg, nothing is going to change the structure. We are here maybe for even 2 months. Nothing is going to change the overall direction until we will not break the left side of the leg high or left side of the leg low, because left side of the leg high and low only have two QMs. One QM is here, one QM here. You can never have any QM here. Let's say if you have a QM here somewhere, then how can your range could be from A to B? It must be from A to B somewhere here, right? So it means what? 100% there is no doubt that on your left side of the leg you only have two QMs, A to B. So this is your second QM, right? Now if we go here and you have the QM, let's say here somewhere, this one, let's mark this one. Let's say you have this QM. Okay, you have this one, this is the QM, right? Anybody don't have any doubt on this QM, right? Because what is this? It's valid pullback, liquidity grab, and the breakup structure. So let's say you have the QM here, and the market goes higher and creates another QM here, and then you say your range is from A to B, something like this, and market comes down to take the internal range liquidity and breaks the structure. Do you think that you will turn bearish on this thing? No, you cannot turn bearish on this thing, because this is the internal structure. Your original structure was here, here, A to B. Never forget that this is your original structure, and this, your left side of the leg is confirmed here, here. Now whatever the QM are happening here, and the price, let's say here, this is the left side, and now we go here something like this, and the market creates the QM, and then market goes higher, and then creates another QM, and then breaks the QM, and then we have the range. Someone call this a range. I don't call this one a range, because I am very much sure this is my range actually on the left side. Let's say someone say this is a range, and the market breaks this one. For me, we are still inside, and I will not go short immediately. Why? Because for me, if this is coming, maybe this is coming somewhere at the POI, and then continuation, because for me this low until this left side of the QM will not challenge either this one or this one. I will not change my bias. This is all ping pong on this side. You play whatever, however you want. Nothing is going to change your bias that you are going to turn bearish to bullish, bullish to bearish. This is all inside structure. So what the point I just addressed in this whole conversation, that is always remember that your range always have two things, A and B. So what, A this one and B this one. Once your B is confirmed, this is your left side. And now whatever the QM you see, everything is inside structure. You draw the inside structure, you have the breakup structure inside, then you have the change of character inside. Later we will discuss about BOS, breakup structure and change of character later on, but I'm just telling you whatever internally you have the breakup structure or change of character, it is not going to change the fact that we are still inside and everything is inside. Okay, so the point was two QMs will confirm the range. Once we have the range is confirmed, then we need to see that this range, the next question is what? We need to see that this range is coming from where? One, this range is coming from, this was the change of character. So this is the bearish range basically. Because this was before we were bullish. BOS doesn't mean bullish. This one is breakup structure. Even this could be, both could be the on the sell side as well. But we were bullish here. We have a bullish breakup structure, and then we have the range. Let's start with the ranges, by the way. Let's start from here, because I just marked the February data, and I don't want to keep too much my chart cluttered. I just keep the current month data, and that's enough for me. So let's say we are coming something from here, and we have, this is the valid. I'm not going to discuss the valid pullback now, because I have already explained a lot. So if anybody don't understand, just go back and watch. This is the valid pullback. We have the liquidity grab, and our QM is confirmed. So in this case, what I did, I just put my dot here, and I said my QM is confirmed. And in this case, the market, what market did, market was going up like this and broke the high and this one. So our range is confirmed from here to here. Okay, and then what we do, we have the market breaks the range, and we have the breakup structure, because we are coming like this from the bearish side. So this is the bearish breakup structure. Now here is the important point, have to understand. We have the latest QM here. Listen carefully. We have the QM. This is the confirmed QM is here. What, once we have the breakup structure, what we are looking for, we are looking for another opposite QM. So where is the opposite QM? Look here. This was the pullback. This was the liquidity grab, but market never took the high, so nothing. This was the valid pullback, but we don't have the what is this, the valid pullback. We don't have what, the liquidity grab and the breakup structure. So this thing never happened, so we will not call this as a QM. And finally we have here, this is the valid pullback, because let me just zoom out a little bit. This one, If you see that we are coming something like this, and like this, and this is not the inside bar. Okay, so that's why we can use this high. And once this high is taken out, the first element is completed. What? The valid pullback. And then what we are looking for, the liquidity grab. The liquidity grab is also taken out. And the third point is what? The third point is the market need to take the valid pullback high. So in this case, this valid pullback is taken out. So we have the here, this one. So we have the QM here. And in this case, what we have? We have the range from A to B. I check the questions later on. I don't know. Let me check if someone is sending me any questions. Hamza, do you know that what is the QM and everything? You directly go to the T1 and T2. I don't know. If you know everything, then you just keep patience. I think everybody have to be in with us that first they should know that how to mark the ranges and QM and everything. Then we will slowly will go to the T1 or T2, even T5, 7, 10. Everywhere we will go. Just wait for a while. Okay. So we have the A and B. Once we have this range is confirmed. What is this range basically? We have the bearish range. And bearish range, when bearish range was confirmed, once our QM was confirmed. And now what we are looking for the market, we are looking for the market to take the internal range liquidity, and then what? The external range liquidity. So this was the internal range liquidity, by the way, this one. Market took the internal range liquidity, and above this we have only this high. And if someone is I know that a lot of people they have this confusion that the market, how we know that the market will not go here and just go here, or market will not take all liquidity. These are the advanced things. We will discuss everything slowly. This session we will just uh, stick on the structure mapping, and how, and especially about the, and of course structure mapping comes with the QMs or these kind of things. So today's session will be specifically on structure mapping. Okay, we take the internal range liquidity, then what we are looking for? We are looking for the external range liquidity. Once we have this was the external range liquidity. So this was the range from here to here. So market came like this, took the internal range liquidity, and then we have what? The external range liquidity. But notice here what market did. It's just the wick. If the market didn't close below the level, this was the level. Let me remove this one. This was the liquidity grab only. If we have the liquidity grab, what we are looking for? We are looking for another QM now, because this is not a valid breakup structure. If it was a breakup structure, then our high will confirm something like this, something like this. And we will call this, the market is coming like this, and something like this, maybe if this was the valid breakup structure. And then maybe this will be somewhere the liquidity, internal range liquidity. Market takes the internal range liquidity, then external range. So we are going something like this. But what we have the liquidity grab. Once we have the liquidity grab, remember this question, remember this thing. We are looking for a QM, and once we have the QM, now we are going to turn bullish. By the way, this high is not confirmed. Why? Because we don't have the valid breakup structure. So our range is still from here to here. And once we have the QM, and this is the valid QM, right? We are coming something like this, and then what we have, like this and like this, right? So this is the liquidity grab, this is the breakup structure, and our QM is confirmed. Once our QM is confirmed, then this low is no anymore valid for us. Why? Because now, because this was the liquidity grab, now we have the range from here A to B. So that's why I remove the dot from here. Now, what we already turned bullish once our QM is confirmed, and then what market did? We have what here? The liquidity grab on the other side of the market. And once we have the liquidity grab, what I said, what we need to do? We need to find a QM, and this is the QM. This is the QM. And once our QM is confirmed, we turn to here. What we did, we turn to bullish, and here we turn to bearish. And now, whatever the bearish ranges you find, in this session, I'm not going to talk about the bearish ranges, but like this will be the bearish range, and this will be the internal range liquidity, and this will be the external range liquidity. So we will enter here, and we close the position here or here. It depends on where our 4 or 5R is. Okay, so here is a very, very beautiful setup. And in this case, what we have, we have another breakup structure, but this is also not the valid breakup structure. And where is the QM? The QM for the valid pullback we have here, and the market never took this low, so just going higher, so we never have a QM. And ultimately what we got, we got the change of character. Now we turned bullish from bearish to, we turned bullish here, but by structurally we turn to bullish here, change of character. And once we have a change of character, our low is here. And this is what I said before. Now I'm going to repeat this again. This is the range A to B. This was everything. This one is on the left side, and you will be looking, maybe this is the QM or something like this, or everything will be maybe confusing for you, that how many QM we have, how many QMs in this range we have. But never forget that this range is basically is from here to here. This was our leg. So everything on the right side was our right side of the leg. This was the left, this one. So nothing will change my bias until we will not break this high. And we never broke this high. This is just the liquidity grab. This is just a liquidity grab. This one is just a liquidity grab. And finally, we have what? The change of character with the bullish closed candle. So you understand that how much confusion someone can have here, that how many QMs you will have here. But if you know the structure correctly, then you will understand what is your left side of the leg, and whatever is happening on the right side of the leg, it should not be confused to you until something break from here or something break from here. This everything is just what? Your right side of the leg. Okay, and then what we have? We have the QM here, and then we got what? We got the change of character. By the way, look here, this is also the QM, right? The liquidity grab and the breakup structure. And then where is a valid pullback? If this candle has broke the low, yes, it broke. So this is what? The valid pullback. So liquidity is grab but never have the breakup structure. So we don't have the three elements, right? In this case, what we have? We have, this is our valid pullback, liquidity grab, but where is the breakup structure? Don't have. Similarly, like this, and this is inside, and finally, what we have? We have valid pullback, liquidity grab, and here what we have? The breakup structure. So our QM is confirmed. Once our QM is confirmed, we have the range from here to here. And then what market what market did. Market just created the QM, and then we have another breakup structure. Then once we have another QM and breakup structure, what we have? We have the this high is confirmed. And now what we have? We have another breakup structure, and what we are looking for? We are looking for a QM to confirm the range. But we don't have a QM. But once we got the change of character, this turned into the QM. So we have the range from here to here, but we already turned bullish. So I don't know if this is the intermediate stuff or advanced stuff for you, but this is how we mark the structure, and we quickly finish this thing. And now we have the QM here, and now we have the range from here to here, right? And the market comes down, take what? The POI, and then what is this? The external range liquidity. And the market takes the external range liquidity. We will enter somewhere here, and our target is somewhere here. And this is more than 5 hour, but we will close somewhere here once we get the 5 hour. That's it. And then we have another QM, and then market just on this news change the character. So we have the high. Where is the low? The low is not confirmed until here. You will have this recording. I just left this area for you to check why I mark this is a valid QM, not here. You find this one, and it is not, by the way. This is the correct one, and find why not. And once we have the valid QM, what we have? We have the range from here to here. By the way, this meeting will end maybe in few minutes, and then you can connect with the same link again, and then I will take the questions before this meeting, and I quickly finish this. So you can use the same link again to connect. And then what we have? We have the range from here, A to B, and we turned bullish from here once we have the QM, right? Because what we are looking for, we are looking for something to take the internal. We don't have any internal range liquidity or something. And then this is not the, this is the current market structure, by the way. So we have, now currently we are in this range, A to B. So this is the left side of the leg, and this is the right side of the leg. So whatever you see the QM here, or maybe QM here, but this is not the QM because these are two inside bars. I explained in my previous video. If you see here, you see this, these are inside bars of this big candle. So this is not the valid pullback. The valid pullback is basically here, something like this, and something goes like this. So market if breaks this valid pullback, then we will say this is the QM. But this is the internal QM. Why? Because our original main structure is here, from here to here, and now you can. Okay, so now we have the structure A to B. This is the bearish change of character, and this everything is inside. And how we play these inside, of course, slowly in the next sessions I will explain everything, and every move we can play, every move we can play. But of course I'm not going to discuss today. So if anybody have any question about this whole conversation, you can ask. You can write your question in the general chat, or wherever you want.
Hello, Imran.
Yeah.
Yeah, I have a quick question. Can you go back to the left side of your chart a bit? Yes, right here. If, say, for example, where you have internal range liquidity marked up on a chart here, right?
Mhm.
If on the lower time frame, because like from what I'm seeing here on the lower time frame, this would be hello, can you hear me?
Yeah, I can hear you.
Yes. So on the lower time frame, if the QM is confirmed, because I'm sure from what I'm seeing here, if you go on the lower time frame, then you'll be able to see a QM here, and I could be wrong, but I'm just from looking at it, you'd have
I
a
can see on
range.
my chart. You can also draw. I can see where you are talking. So
Okay.
you
So
can.
I'm talking about here, right? You said this, I'm looking at this portion right here.
Okay.
And you said, yes, you said this is your range from A to B, correct? So from looking at this area here,
Excuse me. 1 second. I don't have the
yeah,
range from A to B here. This internal range liquidity come from range from A to B. This was
okay,
previously we have this one, and this one turned into later, and I removed this one because this is not the valid breakup structure. Okay, please continue.
okay. All right. So looking at this, right? So on the lower time frame, my question is, would this be, if this is a valid, could that, yeah, on the lower time frame, if this is a valid QM, would you count it as a structure point, or based on the 50-minute time frame that you're on, would you just ignore it and just outline it as you had before? Because I'm sure if you were to drop down, say like either the 3 minute or even the 1 minute, you could find a valid QM here, which would make it something like this. Your A and your previous B, as you mentioned. So therefore, when this leg took this high, it more or less created a bullish break of structure. Hence why you could see you got a liquidity grab of this level, price not closing below on the true structure range. Hence why when this QM was created here, price was able to now continue bullish.
Okay, okay, good question. Very good question. I'm going to explain here this area.
Okay, let me just clear my
Yes,
annotations.
please.
Let me see where. Okay, I'm not seeing the option to do. Oh, here we go.
Okay,
Okay,
specifically this area, let's see how we can see these things here. We have a QM from there to here, right? Once our QM is confirmed, what we are looking for on the 15 minute. First we will check everything on the 15 minute. Why? Because all our ranges are on the 15 minute, and we are not going to mix one time frame with another time frame. When the time will come, later on I explain here when I will go to the 3 minute or even maybe the 1 minute time frame. But first, this is our range, and until the QM is not confirmed, we will not say the range is confirmed. And once our range is confirmed and the QM, the market has confirmed the QM, what we are looking for? We are looking for the internal range liquidity, and then we are looking for the external range liquidity. Until here, everything is so much clear, right? But once we have the internal range liquidity, now I I explain here, but I don't want to make the beginners confuse here that you switch between different time frames here. But since Carl, you asked this question, so I'm going to explain you specifically. Look here. Once we are here, I can see even sitting on this time frame, and even I don't go lower on the 3 minute time frame, and I know that on the 3 minute time frame, this is the range from there to here, and this was the internal range liquidity, or maybe somewhere here was the extreme order block, and this is where the market took the external order block on the 3-minute time frame. And this area, let me explain this. This area for me on the 3-minute time frame turned into the inducement. And on the 3-minute time frame, this is the inducement. Why? Because when we have the range A to B on the 3-minute time frame, and the market broke the structure, and even the candle closed higher, for someone, this on the 3-minute time frame, this is the change of character. And because for someone this is the change of character, it means someone turned bullish here, but it doesn't mean that he will enter here, of course. Then what he will do, he says he now his range is A to B. When this B will confirm, when this QM is confirmed. Once his QM is confirmed, he said he has the range like this, and now he's thinking that this is all his internal range liquidity, and he wants to buy something from here, but he just stopped out and doesn't know that where this move all is coming from, this so aggressive move. Usually the pullback move is like a stair steps, but the pro trend trade is like the elevator, something like this. So it doesn't mean that only on the sell side, even on the buy side, if this is the pullback and pro move, maybe will be something like this. So maybe if someone, for someone A and B on the 3-minute time frame, and this is the change of character bullish, and someone wanna buy here, and he even doesn't know why this whole move coming so fast, and even take his, ultimately even take his stop. This is actually, that's why here comes into one time frame for your structure. So in this case, for me, I know that my structure, I'm checking my structure on the 15-minute time frame. So I always am so much aware one time frame higher, that what is the universe above, if I'm not turning into this kind of situation, that where the market turned into change of character, and I'm thinking that, oh, this is the change of character, the market has closed above the level, and let's go buy, and then all suddenly all your stop loss. Similarly, if on the 15-minute time frame, let's say, let's go here on the 15-minute time frame, if I have the change of character, I know that what is my higher time frame h1, what the universe above is. The same here. For 3-minute guys, he always should know what is the universe above. He's on the 15-minute time frame to check if he is not into the inducement area. If he is into the inducement area, it means that he turned bullish was actually wrong, because this was the inducement. And whenever we have the inducement, we are looking for on the other side of the market, and we have countless examples, day after day. Even you have this example on 1 minute to 5 minute, or 3 minute to 15 minute, 15 minute to 1 hour, 1 hour to 4 hour. You have these examples all over the places, but you always have to understand that what, if your range marking time frame is 3 minutes, then you, in this case, this is the 15 minute, but this is just example, this one, if your marking is on the 3 minute, you always check that one time frame higher is doing what. If that one time frame higher turns into the inducement, it means you cannot expect the change of character here. If you will expect the change of character here, you will destroy here. Similarly, I'm sorry. Similarly here, when I will on the 15-minute time frame, if I will turn into that bullish, or I will change, I will have the change of character. I am so much aware that this area, when I turned bullish, maybe on the H1 time frame, is uh, is just just this area. And then if I'm looking for buy here, and I thought, okay, this is the change of character, and now once the QM is confirmed, and let's say I have the range from here to maybe somewhere here. This is example purpose. And I say, okay, now I have a change of character, and now I'm bullish, and I have the confirm the range with the QM, and now this is the internal range liquidity, and I want to buy something from here. I will destroy, because I know that the fact that if my important point, listen carefully, everybody. Remember, when if you mark the ranges on the 15-minute time frame, always go one time frame higher to check what the above universe is doing with you. If you mark the ranges on the 3-minute time frame, always go one time frame higher to check what the universe is doing above from you. In this case, you will never ever trap in this kind of situation. In this type of situation, you will never turn on the wrong side, that you turned bullish and now you are trying to buy, and you will get destroyed, because market is already going, already induced the people on the wrong side of the market, and now market is going on the other side of the market. Okay.
That totally makes sense, because even just looking at it as well, I could just I can see clearly what Marketa you said. This is your inducement point of this lower time frame QM here. Market just liquidity grab, broke, formed another QM here, and then pushed. Because even though when you look at the true structure, it never closed below this level at all. So yes, so from my point of view, yes, this is our bullish, my bullish leg, A to B. However, we have to wait until this gets induced before we even look for an entry to continue the market in the other direction, as you mentioned. So it created the bullish leg and induced traders to buy at this level, took them out, and then it pushed.
Yeah. So for someone, look here, for someone, this is also maybe on the lower time frame, on the lower time frame. This is very little bit, but it's not going to happen always like this. But for someone, what will happen? Look here, this will be the change of character for someone on the 3-minute time frame, and once the market closed lower here, and because they were the bullish here based on the change of character on the 3-minute time frame, and they got destroyed, and now market closed here, something 1 2 3 candles, something like this, and now they say, oh, market is just ping pong, is before we have the bullish change of character, now we have what, we have the bearish change of character. And in this case, after QM, now they are selling here, and they will destroy one more time. This market is so crazy to take you on the both side. It's not like you just if you think that you have the change of character and you just play, the market will play with you on the both sides, and both sides they have destroyed you, because on this 3-minute time frame for you, another change of character, now this is a bearish, but actually when you go on the 15-minute time frame, maybe this is what, just a week, and this was also the liquidity grab, and once we have the liquidity grab, actually we are looking on the other side of the market, and we are expecting already the market will take this high, and what, imagine, and a lot of people, they are trying, and lot of people, they are trying to sell here, they are trying to sell here, even they are trying to sell here, and everybody, first they destroyed here, then they destroyed here, now they are destroying here. So the inducements are on the both sides, so you have to understand it very clearly. Okay, anybody have any other question?
Okay, hello Imran.
Yeah, James.
Yes.
Yes.
Thank you very much. My question is these are two opposite QM. The low of the QM,
Where you
the
draw
low
on
of
my chart?
okay.
Where you want to see?
Yes. The low of the QM, the two QMs, the low. This
I can't
bearish
see
QM,
your,
the low.
I can't see your drawings.
Okay, the one that takes liquidity, the one that causes the break of structure.
James, first I want to see your drawings where you are talking. I don't know where you are drawing. You draw on my chart. Do you know that you can draw? There is a pencil on the Zoom somewhere. If you draw on my
Okay.
chart.
Yes, yes, yes. Okay. I mean here. Uh-huh.
Okay,
See
good.
my drawing.
Okay, this is the QM. Okay.
Yes. Yes. So that QM, part of the three elements of a QM is that there will be liquidity grab before it takes the previous high that confirms the valid break of structure.
Mm-hmm.
Yeah. Okay. Now, is there liquidity grab on this low?
Yes, we have. Let's see here.
Okay.
Look here. What the liquidity grab is basically. The liquidity grab is what? Market have the valid pullback, and then from where it started, at least to take that low where this pullback started. Let me draw a little bit better. What is the liquidity grab? Number one, we
Mm,
have the valid pullback. Number
yes.
second, where this pullback was started, have taken that pullback? If yes, this is the second point. The third point is what? Where the pullback was ended, we got the breakup structure. If yes, this is a valid pullback. So let's see here. So the market is coming something like this,
Yes.
and this is what we have, the pullback. Why? Because it took the previous high, and
Okay.
then I said where the pullback was started, it needs to take the low of that one, and market took the low. Once market took the low, and where this pullback was ended, this area, has the market has taken the breakup structure? If yes, so is it not like something like this? On the, you have to see this area a little bit carefully. With the practice you can understand this area. Okay.
Okay. The liquidity grab is that place you pointed arrow.
Look here.
Okay.
Look here.
Okay. Okay.
This,
Okay.
let me little bit zoom again. Look here. This is the high, this is the high, this is the high, right?
Yes.
And the market, basically what is this? This is the outside bar. So market came down also, and also it took the high. Can you see this high is taken out?
Yes. Yes.
So
Mm,
that's why this is something, this thing something turned like this one, the liquidity
okay.
grab, because this low is taken out, because this low has taken previous low also and this low also, but this is the exceptional case. That's why you are so much confused here. But if we have the outside bar, then this is this is a valid pullback. And once market, because this is already a outside bar, so in this case liquidity is also grabbed already. So also valid pullback, because it took the previous bar high also. And once we have the breakup structure, we will call this as the QM. That's it. Simple. Okay.
Yes. Thank you very much.
Yeah, but this is very exceptional case. Sometimes we will have this kind of QM, but not every time is going to happen. But this example, I have this example in current market, because if you will see this example in the future market, you will never understand how to deal this one. So I already discussed, but it is not going to happen too often, because if you notice this, every QM is so much clear. Every QM. Later you check in the look this one. Look this one. Something was coming, something like this, like this, like this, and this one. So this was the pullback, valid pullback, and this is the liquidity grab. And once market broke the structure, we say this is our valid pullback. So it's not going to happen. Every example will be not like this. Many times you will see this structure, and QM structure is this one, something like this: liquidity grab, and then the breakup structure, and you will call what? You will call this as a QM. You understand? And similarly, once you are going up, this is what? The liquidity grab, and this is what? The breakup structure, and this is the QM. So that example, like outside bar, is working as a pullback as well, and also working as the liquidity grab. Very few examples in the market, but they have. But we call them because it is a valid pullback, also liquidity grab, and then we wait for the breakup structure. You understand?
Yes, yes. Thank you very much.
No problem. Okay, anybody have any question, or we finish it?
Okay. Hello.
Yes, yes, please. Who's there?
Okay. Yes. Yes. After the liquidity grab, you the place you choose your key level. We want to know the reason why you choose that key level as the area you will enter from.
Which one? Can you mark something?
Okay.
Check with your previous marking.
Okay. Yes. This place. Yeah. See my marking. Hello.
Yes, yes, yes.
Can you shift your chat? Can you adjust your chat a little?
Okay.
Okay. Yes. Yes. Now I'm talking about entering this market. This market now. After the internal range liquidity have been taken, now how do we know that okay we should be entering from here after the internal range liquidity has been taken? How do you choose the key level above
Where
the
are you
internal range
marking? I
liquidity?
can't see any marking.
Okay. I mean here. Okay. I mean this place. See
Okay.
my arrow.
Mhm.
Mhm. So how do we choose a place to enter from that area? Because we could as well expect that the market will say after taking this internal range liquidity, this internal range, we could expect the market might still come here. But why it did not come up there? It
Yeah,
just
this is
came
a
here,
very
took the
advanced
internal range.
question. I'm not going to discuss today, but of course, a lot of people they are not they have this problem. You remove these drawings, please. A lot of people they have this problem that if something is like this is the QM. Once this is confirmed, and then how do you know the market will come here or come here or come here, and then we'll go to take the external range liquidity. Maybe that will be in the next topic, because this is not a small topic. We are already running out of the time now.
Okay. No problem. Thank you very much.
Yeah. Okay, we finish this topic. Anybody? Okay, thank you very much.